Hello, everyone. Good morning, and first of all, happy Thanksgiving Day to everyone out there. And I do hope you're enjoying your holidays. And at the same time, good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, today is a special day, and in fact, today is a public holiday in the United States. So definitely, the market is going to be closed for today in the United States. So in the United Kingdom, we are still going to be having some activities going on, and there is a tendency that we are likely going to be seeing a low turnout in price movement for today. So we shouldn't be surprised if we really did not see any emphatic movement of price action today. So I just needed to let us know that first of all before we delve into today's trading session. Well, in preparation for today's trading session, I have indeed done a comprehensive technical analysis on all of the assets on our watch list for this week using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into these market conditions. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to how we are going to be managing our positions today. But we are going to be deliberating on all of this in a moment. And in fact, there has been quite a lot of interesting situations going on behind the scenes in the financial market, which of course has um, been reflected on the chart in the last 12 hours. And we are going to be looking at that one too as well. Now, for those of you who are joining us for the first time, you are highly welcome on board, and I'm very, very glad to have you around with us this morning. Well, you may be asking, what is this all about? Well, the Forex Morning Mastery is a platform where we as technical traders come together every day as a community to engage in follow-ups and reviews of our current positions in preparation for both the London and the New York session. The session usually kickstarts officially 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you always stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And my aim here is to equip you with knowledge and skills necessary to make informed trading decisions independently. The more time you spend with me, the more and better you will become in comprehending our analytical approach and utilizing that information you gathered during the course of the session to enhance your own trading decisions and strategies. So once again, I welcome you all on board. So with that being said, here we will be diving right into the business. But before I do, I can see a handful of comments right here. I can see your comment here, Kelechi. That one caught my attention, and I'm glad to have you around this morning. And then I see Asafa. Good morning to you, Asafa. Ika's Diary. Good morning to you. Hello, Innocent Babe. Trust you're doing very well. I'm very well, thank you here, and I hope you are doing as well too. So, in the absence of no other ones, and let's dive right into the business for today. So, as usual, the first thing we usually do is to check on the economic calendar. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors usually manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, on the economic calendar, we usually focus on high impactful event from economic docket that affects the assets on our watch list. And basically for this week, and based on the asset we've been monitoring so far, we are only going to be looking at the United Kingdom and the United States economic docket. Now, if we look at what is going on here today, Thursday, November 23, we have a couple of, I think, three high impactful events from the United Kingdom, which will be happening simultaneously. And this, of course, will be happening in about an hour from now. So everybody is anticipating this event, and that is the S&P Global Publications. Now, the S&P Global Publication is a very, very important event that majority in the market will look forward to, as these publications usually cover a wide range of topics, including market trends, credit ratings, economic indicators, and industry insight, hereby providing us with investors and market participants with valuable informations that can help them make informed trading decisions and stay abreast of recent market development. Now, if we look at the PMI, the S&P Global Publications for today from the United Kingdom, here we have the CIPS Composite PMI, the CIPS Manufacturing PMI, and the CIPS Services PMI. Now, for those of us who don't know, let's quickly run through what this is really all about and how it's going to be affecting the market sentiment today. Now, for the Composite Purchasing Managers Index, it's released on a monthly basis by the Chartered Institute of Procurement and Supply, and is a leading indicator gauging private business activities in the United Kingdom for both the manufacturing and services sector. Now, this data is derived from surveys to senior executives, and it gives us an insight into what is really going on in this sector. And usually, any reading below 50 is considered as declining, which is more or less negative, which in the long run will be affecting the pound sterling negatively. Now, if we look at the previous data for the month of October, it came in at 48.7, which is way below the 50 mark, which we want to be using as a gauge to have a positive sector. Now, for this month, economists are also projecting a 48.7 as well. So it simply means that based on what they can see on ground, there's really no change in that regard. So we look forward to see what the actual data will be on that one. Then we also have the manufacturing PMI, which is a leading indicator gauging business activities in the United Kingdom's manufacturing sector. Now, on this one too as well, a reading below 50 signals that activities among goods producers is generally declining, which is of course seen as a negative indicator for the United Kingdom, which will dovetail in the pound sterling probably nosediving. Now, from the previous data for the month of October, we have 44.8, and we have consensus projecting 45. So there's a little bit of expansion expected in that sector for the previous month. So we look forward to see what the actual data will be on that one. Then finally, we have the CIPS Services PMI, which is a leading indicator gauging they reflect the change, if any, in the current month compared to the previous month, and can anticipate changing trends in official data series such as the GDP, employment, and inflation. A reading above 50 as well indicates services economy is generally expanding, a bullish sign for the pound sterling. Meanwhile, a reading below 50 signals that activity among services provider is generally declining. Now, let's look at what the previous data said compared to what economists are projecting for this month. Now you can see what we have here, 49.5, and economists are also projecting 49.5 again. So from what we can see so far, based on what economists are projecting, it appears that there's really not going to be a change as expected. So we look forward to see what the actual data will be. But one thing I want us to know here is that the anticipation of this high impactful event usually affect the market sentiment. We usually see our market participants anticipate this event, which of course reflects on the chart as price action. Now, as technical traders, what we want to be doing is to sniff through the current market structure to identify patterns and structures that we can actually use in anticipation of this event to position ourselves for it. Now, with all the informations we have gathered here from the economic calendar, let's dive right into the business and let's see things from a technical standpoint. So as usual, the first asset we will be taking on today is going to be the US All Spot. And in fact, the US All Spot was, we had a phenomenal 24 hours on the US All Spot as we saw price action drop significantly to the downside after taking us out of the buy positions we were looking at yesterday. And in fact, we were able to scoop over 800 pips in price movement. And in fact, if you had moved your stop losses accordingly, at least a minimum of 650 to 700 pips will be in your kitty at this point in time. And for those of us who took advantage of this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, if we look at this situation here, the question that we will be asking is, why did price move so well towards the downside yesterday? And in fact, this was due to the recent unexpected decisions by the OPEC Plus member to postpone their meeting on production cuts, which was supposed to hold on the 25th and 26th of this month. That was on Sunday and Monday. Now they've postponed it to the 30th of this month, and that is next week. Let me check my calendar here. So that is next week, Thursday. And as a result of this development, this has raised a lot of concerns about the global crude oil supplies and did incited some level of fear in the market, resulting in the significant bearish momentum to the downside. And I can remember vividly yesterday while we were talking here, I think someone in the community mentioned some double bottom structure at some point around the $77.10 level, where he was saying, I can't remember who was saying that price retesting the neckline could incite an uptrend scenario. And I did tell us yesterday that we shouldn't rely basically on theoretical expectations, as the market could do whatever it wants, and our job here is to ensure that we listen and follow through with what the market is saying. And one of the things I made mention yesterday is that I will feel comfortable selling only if price action takes out the $77.10 level, which was exactly what happened, and I did hope we took advantage of that opportunity. Now, for those of us who are not part of our earlier sessions, I would like to take us through how the week began for us on the 1 hour time frame, so we can have an idea of where we are coming from in anticipation of where we are going to as we begin the second half of the trading week. So at the beginning of the week, we initially identified, before I go into that, for those of us who are joining for the first time, I would like to state here that I already done a top-down analysis on this asset at the beginning of the week, where we were able to identify the key levels and structures that we will be using to guide our decisions for this week. And if you are not part of that session, I encourage you to watch that video so you can have a background knowledge of where we are coming from, how we got to this point, and it can also serve as an educational tool into understanding how to use price action analysis. Now, the links are right in the description box of this current video, so you can check them out after the live session to keep yourself updated. Now, with that being said here, let's dive right in. So at the beginning of the week, we had our key level marked out, which was duly situated at the $76 area, and we saw how the week started on a positive note as we initially saw price action confined within the $76 level, which happens to be our key level, and the $76.80 area to emphasize some level of uncertainty around that area. And during that session, we talked about how important this current structure is as we saw price action oscillating right around the resistant line of the descending channel we identified on the 4 hours time frame. Remember, we had this descending trend line marked out at the beginning of the week. Now, with price action trading around that area, it could push price to the downside, respecting the resistance line one more time to incite a downtrend. And if price breaks out of that trend line, then definitely we will be looking out for buying opportunity. And that was exactly what happened on Monday. We saw price breakout retest structure, and we positioned ourselves just right above the resistance line of that range at the $76.80 level to capitalize on that uptrend move. So the breakout of that structure triggered our first buy position for the week, and in fact we had the privilege of adding more positions as we had one right here at the $77.95 level, giving us about 160 pips move on the first buy position, while the second buy position moved about 50 pips move before the bearish momentum began here. And it took about 24 to 48 hours for price action to go through a consolidation phase, which we actually thought was going to be a retracement of that impulsive move that started the week. So we saw price range within the $77.95 level and the $77.10 level for a while, giving us something that looks more like a potential reversal pattern. We took advantage of a buy position at the $77.50 level. That was on Tuesday. We took advantage of that one, but I told us all yesterday, if you remember, that we should move all stop losses to our entry point, as there are chances that we could see a downtrend move. And one of the reasons why we also looked forward to some bearish momentum yesterday was as a result of the latest development as regards to the US crude oil stockpile, which rose with a phenomenal over 9 million barrels for the previous week, as against the upper week, which came in at 3 point something million. So it was, and our simple economics, when there is a huge supply in the market, the tendency for price to drop to the downside is very, very likely. And coupled with the unexpected postponement of the OPEC Plus meeting for November 26, resulted in this huge bearish momentum all the way to the downside. And we did had a couple of levels more to the initial positions, as we had levels at the $76.80 level and the $76 area to capitalize on that bearish opportunity. And for those of us who took advantage of this opportunity, well done and kudos to you for being on standby to capitalize on this move, as at this point in time you must be in the phenomenal positive side of your portfolio. And well done to you guys for doing so. Now, with that being said, we are not in any position right now, as price action, especially price action as buying pressure has resumed, as we all saw here, bringing price back into that area around the $77.10 level and the $76 area throughout the Asian session, giving us an insight into the uncertainty going on in this market, as I'm of the opinion that market participants are in a limbo right now, looking to see where price is likely going to go. And of course, they will be sniffing behind the scenes to have a little bit of information to guide what next to do. But as technical traders, what we are going to be doing here is to try to understand what is going on in the market by looking at the price action to understand the psychology of market participant. But before we go into this particular range here, there is something I would like to share with you on the higher time frame, that is the 4 hours time frame, which is very peculiar with this current structure and is one of those things we talked about at the beginning of the week. So permit me to go into the 4 hours time frame here to quickly show you something we saw at the beginning of the week. Remember, after taking into consideration the nature of price action in the last 3 to 4 weeks in this market, we were able to confirm that price action has been bearish, and interestingly we saw our price transition into a series of lower lows and lower highs, giving us a descending channel to work with at the beginning of the week. So this is the resistance line of the descending channel I was talking about earlier, and this is the support line of the descending channel. Now look at what happened here at the beginning of this week. We saw our price broke out of the resistant line of that descending channel. What a beautiful signal that we are likely going bullish, right? And then we saw our price follow through with a technical expectation of price coming back to retest the structure in anticipation of an uptrend continuation. Now this is getting very interesting right now. Now we saw what happened yesterday. As soon as price action tested the resistant line of that descending channel, we saw an engulfing bullish candle spring out of that structure to give us an insight into the potential that price is likely going to the upside. Now if we take our Fibonacci retracement tool and run it through this impulsive leg, you will see our price action as soon as it got into that area between the 50 and the 78.6% of our retracement tool. We saw a buy pressure resume from that area. Now the question going into today's trading session is how are we going to capitalize on this move? How is price going to continue to the upside, or will this be a way to shake out a lot of people to incite a downtrend move if price action will break down the $75 area here? Now for me to sell at this juncture, please, I would like you to note this: we want to only sell if price breaks down the $75 area, bringing price to the downside. But if price action continues to find buy pressure above our key level for this week, which is situated at the $76 area, remember how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now with this scenario in mind, I'm of the opinion that price is likely going to continue to the upside, as we all know that the OPEC are working behind the scenes in such a way to reduce the oil production, which it's a way for them to artificially raise the demand for oil, hereby making the price of oil to skyrocket. Now going back into the 1 hour time frame, we have a range which we will be using to guide our decisions for this week, and in fact that same range is still this range where we started this week. Remember, at the beginning of the week, price action was initially ranging between the $76.80 level and the $76 area before price broke out of that structure to incite our first buy position for the week. Now price is back into that range, and personally I want to be looking out for buying opportunities at the breakout of the resistance line again, which will be the second time price will be breaking out of that structure. And if it continues to climb up, we have the $77.10 level, and we have the $77.95 area, and of course the highest point for this week at the $78.40 area to look out for more buying opportunities. And remember that you want to be having your stop losses in place anywhere below the previous low, so we have between 55 to 65 pips of stop loss to protect the current position if it gets triggered at any point in time today. So basically our center of focus for today's trading session is going to be between the $76.80 level and the $76 area, which you do want to be marking out on your chart, as you will be needing it as a reference point to guide your independent trading decisions today. So let's see how the market will play out around this area. But I also want us to understand that today is going to be a public holiday, and the US market is not going to be open today due to the Thanksgiving holiday, and there could limit the potential of this move. But we never can tell. The UK session can also push some traction into this one. So let's see how the market will play out, and if there is anything new that comes up today, I will definitely give you updates on both my TradingView and Telegram platform. So at this point, I do not know if you have any questions whatsoever. If you do, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list for today. Okay, so I see a couple of comments. Okay, Adam Ishak. Okay, I'm glad you are doing well. You're welcome. Hello, Jonah Aruna. Good morning to you. Glad to have you around with us this morning. All right, so in the absence of no questions, I do want to assume that we are all on the same page here. Let's see how the market will play out, and I will definitely give you updates on my TradingView and Telegram platform. So on that note, let's move on to the next asset on our watch list. So the next asset on our watch list for this morning is going to be the GBPUSD. What an interesting asset this is. And in fact, we have a situation here where price action is at this point, I would say, consolidating, as we can see how price action had been ranging between the 1.254 and the 1.24650 since the beginning of the week. Remember, we were buying at the beginning of the week. We had a couple of buy positions, rode the momentum all the way into the 1.255 area before some bearish momentum came in, break down our ascending trend line, and push price to the downside. And I can still remember vividly what I said yesterday as regards to that bearish momentum, that it could likely be a retracement, that if price it could be a short-term retracement, and that we might likely be seeing the 1.24650 serve as a platform for buying opportunity, which actually did yesterday. Now, with the way things are going, we had a sell position triggered yesterday, which was later taken out of the structure. But for me personally, I still think that the overall outlook of this current market condition still remain very bullish, where the 1.24650 level could still serve as a platform for renewed bullish momentum. However, it is important to note that the US dollar may strengthen as investors perceive persistent inflation in the United States economy based on the recent economic data, which potentially is putting pressure on the pound sterling at this point in time. So that means that with this in mind, we will not ignore the potentials that sellers can still come into this market too as well. So we are going to be taking into consideration all of these parameters while we view this current market structure from a technical standpoint. Now, for the sake of those who missed out on our earlier session, let's run through how the week began for us before going into the detail. Now, at the beginning of the week, it was a simple setup we had. As we saw, price action for the first 4 to 5 hours of the week confined within the 1.24650 and the 1.24465 level. And you know how we do it whenever we have a range like this. We want to exercise patience and wait for either the breakdown of the support line to give us an opportunity to buy, or the breakout of the resistant line to give us an opportunity to buy. Now, with the situation we had at the beginning of the week, we all saw that prior to our live session, price had already broken out of the resistant line, which of course I missed, as well as it was quite very early for me in this part of the world. I was in fact deeply fast asleep when this happened. But we agreed on Monday that if price will come back and retest the structure, we shall be looking out for buying opportunity, which was exactly what happened. Price came back to retest the structure, and here it goes. It continued to climb new highs, and in fact we were lucky enough to have multiple levels to maximize the potential of that move. So we have the 1.24950, which we added more position. We also added more at the 1.251100100 level. Then we also added again at the 1.2540 area before price action, before the bearish momentum came in, leading into this choppy scenario and finally breaking down our ascending trend line on Tuesday. Now remember, at the beginning of the week we had a couple of ascending trend line which we were using to guide our trading decisions, which one of them is this one right here. And one of the things we said was that if price will break down that trend line, then we want to be looking out for opportunities to sell. Price did break down the structure. Some of us took advantage of that opportunity. Price then, yesterday we had a sell position again triggered at the breakdown of the 1.25100 area, had two more positions added to hit before the bullish momentum came in to take us out of that position. So for this week so far, we've done fairly well, though the momentum really didn't move as much as expected, but at least we're still on the positive side of our portfolio on the GBPUSD. Now for today's trading session, how do we intend to capitalize on the next move, and also considering the fact that today is a public holiday in the United States, which of course might limit the potential of any particular direction in this market? Well, first of all, I would like to say here that this market is still looking very choppy, as we really do not have any specific direction that we can hold on to and say this is where price will be going. But if we look at what has been going on in recent times, let's say the last 36-48 hours, it's more of sellers making a statement in this market. Though the week started on a bullish note, as we saw here, price did break out of our 1.24650, which happened to be the neckline, the resistant line of that range we identified. But one thing you will notice here is that that area between the 1.25275 level and the 1.25590 area has been a strong selling niche, as you will see here, since Tuesday's trading session. So every attempt by the buyers to break out of this zone has been met with strong resistance from the sellers, which tells us only one thing, that sellers are very, very strong around this area. Now, for me to feel very comfortable buying the GBPUSD, I would rather want to see price action take out all the sell positions within this area, and if possible gain some liquidity, which will reflect on the chart as a retest of structure before we want to be jumping into any buy positions here. Now, if I want to take any buy positions around this area, I would at least, at minimum, see a breakout of the 1.254 area at least. If I do want to risk some of my profits for this week, I do want to see price break out of that level. Then at that point, I want to feel comfortable joining a bullish momentum on this one. And if price action goes on to break out of the 1.25590 area, then I will feel very, very comfortable in a buy positions here. But if price does not go that far and instead we continue to see selling pressure around this area, which is peculiar with that zone, then it simply means that sellers are still very, very strong in this market and price may nosedive to the downside. And this might likely be a situation. Remember, we had the ascending trend line broken here a couple of days ago, and between yesterday and 2 days ago, we saw the breakdown of that ascending trend line. And from a technical standpoint, we expect that price will come back to retest that structure, maybe to incite a downtrend move. And if price does a retest, you can see how the retest of the ascending trend line will fall within that strong selling niche we've identified between the 1.2559 and the 1.25275 area, further emphasizing the strength of the sellers here. And if price does this, well, personally, I will feel more comfortable joining a bearish momentum around the 1.24950. And if price continues to drop below the 1.24650, we want to be adding more sell positions to our existing trade. So that is how we are going to be managing our positions today. I'm only looking out for buying opportunities above the 1.254 and selling opportunities below the 1.24950 area. So let's mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So our center of focus basically for today is within that selling niche here between the 1.254 and that 1.24950 area. Let's see how the market will react to that zone today. Let's see how it goes. But personally, if you would ask me, the old momentum is still looking very bullish. As you know, we have our key level just right at the 1.2400 area. Let me show you what it's looking like on the 4 hours time frame so that we can all be on the same page here. So we have an ascending channel at the beginning of the week. Remember, we have our key level at the 1.24 area. So we could still have a situation where price could come into that area to incite an uptrend move. So from an holistic perspective, it's still looking very, very bullish. So let's see how the market will play out in the next couple of hours. And trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So I do not know if you have any questions whatsoever as regards to this current setup, or you need me to do some clarifications whatsoever. Feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. Then while talking, I was able to identify some descending trend line around this area, which we can also be using to guide our decisions going forward. So if we can draw this appropriately, I think we have something like this. And let's bring back our candle chart and let's allow this trend line to touch majority of the pivot high. So we have something like this to work with. So this trend line here is going to be playing a major role to guide our decisions for today. So if price remains below the descending trend line, then we want to feel comfortable in a sell position. So with this new development here, I'm looking at anywhere below the 1.251, then have my stop losses way above this area, dovetailing between 20 to 30 pips thereabout, depending on your entry point. So let's see how this is going to play out today. Mark out these levels and trend line on your chart. And of course, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates. So I see your comment here, Elder Tomaj. Is it Tomaj or Thomaj? I hope I pronounced your name correctly. Good morning to you. So he said here, can you please take a look on Euro USD? Unfortunately, not. I would not be able to do that. So basically we do have I'm very sure you are new with us, so basically we do have a list of assets we've been monitoring since the beginning of this week, which are the GBPUSD, XAUUSD, and of course the USOILSPOT. So these are the assets we are monitoring for this week, and we are not going anywhere outside of this scope. So please pardon me, we will not be able to take that one today. All right, so in the absence of no questions, I do want to assume that we are all on the same page here. And in that regard, let's move on to the final and last asset on our watch list for this week. So the next asset on our watch list for today is my favorite. That is the XAUUSD, popularly known as the gold spot. And at this juncture, we have an interesting situation in the current market structure. And in fact, we will need some high level of patience here for us to be able to capitalize on the next potential move at this current juncture we have here. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an update as to how we are going to be managing this trade. Now, in response to the growing sentiment that the Federal Reserve won't pursue further interest rate hikes, we saw how the gold prices rebounded during the Asian session, countering the retracement seen during yesterday's trading session. Remember, we took advantage of some sell position after we were taken out of our buy positions in a loss. Remember, we had a buy position yesterday with the hope that price will continue to the upside. We bought around that $2,000 psychological level, but unfortunately, sellers took us out of that position, giving us a situation where price action did break down the ascending trend line for the first time this week. However, at this point, gold is still trading below that psychological level at the $2,000 area, which for me makes it look bearish at this point in time, because as long as price remains below that $2,000 mark, I want to feel bearish in this particular market. However, if we look at this from a technical standpoint, there is an interesting setup gradually unfolding on the chart right now, which I will be sharing with you in a moment. But before we go into that, I do want to go through how we started this week, especially for those of us who missed out on this opportunity. Then there's another thing I would like to let you know as regards to the factors that are driving the market sentiment behind the scenes. Recently, we saw how the 10-year US government bond yield dropped to, I think, a 2-month low at this point, which contributes to the dollar's weakness lately. And of course, when the dollar is weakened, this supports safe haven assets such as the gold. So we need to also take that into consideration while we are looking at this from a technical standpoint. So at the beginning of the week, we had our key level at the 1,980. And let me state this again for those of us who had not watched my video on the XAUUSD. I did a top-down analysis during the weekend, planning ahead of this week. So the Forex Morning Mastery, we only deliberate on the 1-hour time frame. So if you want to have a background knowledge of how we got to the point you are seeing here on the 1-hour time frame, then I encourage you to watch my weekend videos. The links are right in the description box of this current video you are watching, so you can check them out after the live session. So at the beginning of the week, we saw how price action was oscillating just right around our key level, making it a very crucial juncture in this market, as we saw price confined within the 1,985 and the $1,973 $3.50 level, emphasizing the uncertainty that was going on in the market at that particular point in time. And of course, you know how we do it whenever we have such a range like this. We want to wait patiently for price action to either break out of the resistant line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Then there's one more thing here that also helped us in making our decision for this week, and that is the ascending trend line we spotted here after capturing the series of higher lows since last week Wednesday. And in fact, when we saw price break down that ascending trend line at the beginning of the week, we begin to think that price will be going to the downside. So we positioned ourselves right below the support line of that range at the $1,973.50 level to capitalize on the bearish momentum to the downside. And we saw price break down the structure, and in fact it moved about 80 pips in our favor before the bullish momentum came in. And of course, you know how we do it in this community. As soon as price action moves significantly well in our favor, we move stop losses to secure the position. So in that case scenario, we had a worst case scenario break even, depending on where you placed your stop losses to. Then on that same day, we talked about the potentials of buyers coming in if price breaks out of this descending trend line, and that if price continues to climb highs, then a breakout of our key level at the 1,980 will welcome buy position. So the breakout of this structure triggered our first buy position for the week as we rode that momentum all the way into the $2,007.50 level, a new high for this week, scooping over 270 pips. And remember that we had multiple entries on this one, as we had levels triggered at the breakout of the $1,989.50 level. We also had levels at the 1,993 broken to the upside, giving us more opportunity to maximize that move. And we also have the $2,000 level broken as well, giving us a significant amount of profit in that regard. However, during our live session yesterday, we begin to notice the appearance of selling pressure. But the fact that the US dollar was weakened by the recent economic data from the United States and the general perspective that there is likely going to be an interest rate cut at the beginning of this week, we had this general perspective there that as soon as the early of next year, we will be having an interest rate cut. We were thinking that price action will continue to the upside. And during our live session yesterday, we had price ranging around that $2,000 psychological level. And we said we want to be opening a buy position around this area. And we actually did, but unfortunately for us, price did take us out of that position in a loss as we saw this bearish momentum come in to take us out of that move. Now we anticipated price and we anticipated selling the XAUUSD at the breakdown of the $1,996 area, which we actually did, and we saw price moved about in 90 pips thereabout. We also had multiple entries, remember. And for those of you who were part of the XAUUSD live window yesterday, I did tell us all before I closed that we move all stop losses and secure all position. And if you had done that, you must have been taken out with a reasonable amount of profit. And well done to you for doing that as well. So at this point in time, we do not have any positions running right now. And how do we intend to capitalize on the next move today? So there are a lot of fundamental factors behind the scenes that are affecting the market sentiment, from the geopolitical tensions in the Middle East to the inflationary status in the United States, and from the swing between the expectation of rate cuts and the possibility of rate hike. All of these are parameters that will be affecting the market sentiment today. And we should not forget the fact that today is a public holiday in the United States, which could have a tendency of limiting whatever traction the market wants to initiate today. Now, from a technical standpoint, if we look at the structure on the 1 hour time frame, you will begin to notice the appearance of a reversal pattern gradually unfold on this chart. Now, let's take a quick look at the structure. Now, following the impulse, I would like to delete this one so that we can have a clean chart right here. So, following the impulsive move that started at the beginning of this week, let me give a visual representation of it. So, following this impulsive move here, we saw that as soon as price action tested that new high at a $2,007.50 level, we saw price drop to the downside. We saw a barrier for buyers, as we saw selling momentum resume. Then again, we saw the attempt by the buyers to try to break out of that structure, which failed the second time yesterday, as we saw price action break down the ascending trend line. Now, if you look at this closely, you will see that we have something that looks like a double top structure. And usually when we identify such structures gradually unfold on the chart, the next thing we want to be doing is to mark out the neckline of that pattern, which interestingly lines up with the $1,996 area. Now, from a technical standpoint, we need price to break down the neckline to validate the potency of this reversal pattern. And of course, in the last 24 hours, we have seen what happened here. Price did break down the neckline at the 1,996 level, and in fact during the Asian session came back to retest the structure. And as soon as price got into this area, we begin to notice some selling pressure resume again around this area, as you will see here that in the last 1, 2, 3, 4, 5, 6, 7 hours, we have been noticing selling pressure, or let me say a consolidation phase around that area, emphasizing the level of indecision going on around that point. Now, in addition to the reversal pattern that is spotted here, you will see that price action also broke down that ascending trend line we identified at the beginning of the week. Now, if price breaks out of our ascending structure from a technical standpoint, we do expect that price action will come back and retest the structure to incite a downtrend move. Now, with the way things are going right now, from a short-term perspective, I'm of the opinion that price action may continue this downtrend momentum that began on Tuesday. Now, as a result of this, price back into the neckline area, I'm looking forward to selling opportunities below the $1,993.50 level. And in fact, we have a privilege of adding more positions if price action continues to break down levels such as the $1,989.50 level. We also have the 1,985 and of course the 1,980 to maximize the potential of this bearish move. So let's see how the market will play out here. How we're going to be having the maturity of this reversal pattern to join that move below the $1,993.50 level. So that is simply how I'm going to be selling the XAUUSD today. Then another parameter here that we will be using to guide our bearish momentum is this descending trend line here. And of course, you do know how we use our descending trend line in this community. As long as price action remains below the descending trend line, we shall feel comfortable in our sell position. But if at any point in time today price action breaks out of that descending trend line, then we want to be getting ready to buy this asset. And one interesting thing about the breakout of that descending trend line will be that if that happens, price will also have broken out of that $2,000 mark, which I told you earlier that I will only feel comfortable and confident buying this asset only if price action breaks out of the $2,000 mark, which happens to be a psychological level at this juncture. So we want to see how price will be going from that area upward, and then if price continues to climb and find new highs, a breakout of the $2007.50 level and the $2010 area will be levels that we will be looking out for more buying opportunities in this market. So basically, for today's trading session, our center of focus is going to be between the $2,000 mark and the $1,993.50 level, where depending on where the breakout happens will give us an insight into where price action will be going for the second half of this week. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. And also, we are going to be having the XAUUSD live window today, which will be coming up about 5 to 10 minutes into the New York session, which of course was not, the US session is going to be closed for today. So I'm not sure how long the XAUUSD live window will be, but I would let you know on my public platform as time goes by. But for now, let's focus within the $2,000 mark and the $1,993.50 level. We are depending on the direction of the breakout will give us an insight into where price will be going. But if you ask me, I will say at this point in time, it looks as if price wants to drop to the downside. But let's keep our fingers crossed and let's wait for our structures to mature before we jump into any position at this point in time. So these are my simple view on the XAUUSD. So I encourage you to mark out these levels as you will be needing them as a reference point to guide your independent trading decisions for today. And if you have any questions whatsoever, feel free to drop them in the comment section. I will be taking the next 10 to 15 seconds off to see if there are any questions before we round off for today's trading session. And if you have found this content helpful and useful in making your independent trading decision, I will really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. Thank you very much as you do so. And if you haven't already, I encourage you to also subscribe to the channel so that you can get updated of new ideas I share, especially during the course of the weekend. And of course, live sessions like this, you will get notified as soon as we come online too. So thank you very much, guys. And then secondly, I dropped the link to the XAUUSD live window right in the comment section. It is pinned at the top of the comment section. You want to click on that link. Click on the notify me button so you can get notified as soon as we come online. So for those who don't know, the XAUUSD live window was born out of popular demand from this community, where we come together during the New York session to monitor real-time price action of XAUUSD asset. So you want to be part of that session. You want to be part of the session to see how we actually take advantage of trading opportunities. And in fact, I look forward to seeing you guys there. So let's see what we have here. Any questions whatsoever before we round off for today's trading session? So I see a couple of comments here. I see your comment from Krishna Veni. Krishna Veni, good morning to you. Glad to have you around with us this morning. Krishna is asking, please suggest chart for 15 minutes time frame. I'm not sure I understand that statement, but I want to assume I do. If I can get that correctly, you mean I should go down to the 15 minutes time frame to reveal positions through which we can take advantage of, right? Well, based on, I don't know which asset you are talking about, but I want to assume it's on the XAUUSD. And if it's on the XAUUSD, I really don't see any reason why I want to go down into the 15 minutes time frame, as the 1 hour time frame here is enough for us to see what is going on in the market and be able to identify what next we want to be doing. The urge to go down into the 50 minutes time frame is just for me a way of trying to get involved with the noise that is happening in the market right now. So you want to join in very early enough. So instead of that, why not just wait for structures to mature? So personally, and especially for those of us who are still profitable on the XAUUSD so far this week, we can simply place our sell stop order below the $1,993.50 level, and let's see if it's going to work out. And if it doesn't work out, we know that we are only risking some of the profit we had made so far this week. And for those of you who are yet to take advantage of any opportunity this week, that is, if you are coming in from a clean slate, then I encourage you to wait for a retest of structure before you jump into that position. Likewise, the same thing with the $2,000 mark. I already have a buy stop order above that structure to capitalize on a bullish momentum if price action breaks out of that level. So let's see how the market will play out here. Let's keep calm. Let's allow the structures to mature right here on the 1 hour time frame. And trust me, you'll be glad you did. I see your I see your comment, Kelechi. I'll take that as a compliment. Thank you very much. Ika's Diary, thank you too. Glad to have you around, and you're very much welcome. Innocent Babe, I take that as a compliment as well. Thank you very much, guys, and thank you for the support. I hope you've clicked on the like button. Please do so. Let's support this project. Let's push this project to a wider audience of traders, and at the same time grow this community too as well. So with that being said here, and with no other questions, I want to assume that we are all on the same page, and I do hope you have clicked on the like button. Thank you very much as you do so. And it's on this note I want to be rounding off for today's trading session. It has been a wonderful moment with you guys today. I really enjoyed every single moment I spent with you guys today. We were able to attend to 3 major assets today, which we have been monitoring since the beginning of the week, which are the USOILSPOT, the GBPUSD, and of course the XAUUSD. And in fact, we were able to identify simple setups using only fundamental tools such as trend lines, key levels, and chart patterns to gain valuable information into the current market condition, and using it to strategically position ourselves ahead of today's trading session. So all I would just say here is that I encourage you to exercise patience and allow the structures to mature before we jump into any positions. And remember, always have a well-defined risk management strategy, as every decision we make in the financial market is more or less an educated guess. And it's only a fact when price action hits your TP target. So on this note, I wish us all the best of luck. Happy holidays to my viewers from the United States, and I wish you a wonderful day. So I look forward to seeing you guys in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. For those who are joining us for the first time, I did not forget you guys. I'm very glad to have you around, and in fact I look forward to seeing more of you. If you have found this content helpful, click on the like button, and I promise you the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decision. So I look forward to seeing you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and at the same time prepare for the last trading session of the week, which promises to be another exciting edition. So on this note, do have a wonderful evening, trade smart, trade consciously, and see you all during the XAUUSD live window. Bye-bye.